Buckle up, everyone, because we're diving deep into the crypto roller coaster this week.
Yeah, things got a little crazy.
Just a little bit.
Yeah.
Especially for our favorite coin, Bitcoin, and all those altcoins that are along for the ride with it.
Right.
So we saw Bitcoin charging past that $100,000 mark.
Yep.
Everybody was excited.
Oh, yeah. Tons of hype.
And then,
Boom.
yeah, just
The drop.
like imagine you're at the top of the roller coaster. Click, 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 click. And then suddenly you're just plummeting.
Straight down.
Yeah, that's what it felt like for a lot of crypto investors this week.
Definitely.
So we've got the Fed doing their thing. Interest rates are all over the place. And people are maybe even thinking about taxes already. It's December, after all.
Oh, yeah. Gotta love tax season.
So let's try to break down what's going on here.
Sounds good to me.
So, Bitcoin falling back from 100,000.
Mm-hmm.
That's a pretty big drop.
Yeah. It is significant.
Even with that little bounce back it tried to do.
Yep.
But for people who are new to crypto, this might seem like the end of the world.
Yeah, it's understandable to feel that way when you see those numbers dropping like that.
So let's talk about those altcoins for a second.
Okay.
Like if someone's just hearing about altcoins for the first time,
Right.
what's the deal with them getting hit even harder than Bitcoin in this whole thing?
So it's like this. Think of Bitcoin as the giant roller coaster, the one that everybody knows and loves.
A classic.
Exactly the big one.
Yeah.
And then you have all those other smaller, faster rides spinning around it.
The teacups.
Yes, exactly. The teacups, those are like your altcoins. They can be a wild ride, even more intense than Bitcoin.
Yeah, for sure.
So when Bitcoin takes a dip, those altcoins tend to swing even more wildly.
They get whipped around.
Yeah, you see it with Ethereum, Cardano, Solana. They lost a big chunk of those gains they made recently.
It's like getting thrown around in those teacups.
Pretty much.
So the big question is why is this happening?
Well,
I think a lot of fingers are pointed at the Fed right now.
yeah, the Fed's definitely playing a role here. When they signal that they're going to raise interest rates.
Which they just did.
Right, exactly. When that happens, investors start to get nervous.
Like they're hitting the brakes.
Yeah, it's like the Fed saying, hey, things are getting a little too hot. Let's cool the economy down a bit.
Uh-huh.
And that makes investors pull back from those riskier assets like crypto and look for something safer.
Like they're moving their money into a more boring ride.
Basically, it's a classic risk-off situation.
So the Fed taps the brakes, and it's the crypto folks that really feel that jolt more than like the stock market people.
Exactly. Crypto is just more sensitive to those changes.
And then there's this whole other thing that happens when the market gets all shaky.
Oh, yeah.
Leveraged liquidations.
Ooh, that's a mouthful.
I know, it's a scary term.
Yeah.
So break it down for us. What does that actually mean for like a regular person who maybe has a couple $100 in Bitcoin?
Okay, so imagine you're really, really confident that Bitcoin's price is going to go up.
Okay. Feel good about Bitcoin.
Right. You're feeling bullish.
Yeah.
You decide you want to buy even more Bitcoin than you can actually afford right now.
So I'm going to borrow some money.
Exactly. You borrow money to buy more Bitcoin. That's using leverage.
Okay.
It's like adding rocket fuel to your investment.
Ooh, risky.
But here's the catch. If the price dropped
well.
and you borrowed money to buy in,
Double O.
your lender can force you to sell your Bitcoin to cover that loan.
Oof.
That's a liquidation.
So you're basically getting kicked off the ride.
You're getting kicked off the ride, and you might even owe money still.
So people who are over-leveraged, betting big on Bitcoin going up, they're the ones that get hit the hardest when the market takes a turn.
Yeah, they're the ones who feel the most pain.
Ouch.
And when all these forced sales happen, it pushes the price down even further.
Like a domino effect.
Exactly. One liquidation can trigger another, and another, it
Interesting.
creates this downward spiral. And we saw over $1 billion worth of liquidations in just one day this week.
Yeah, that's a lot of dominoes.
It is a lot of panic selling, for sure.
Okay, so you mentioned crypto has a history of these booms and busts.
It definitely does.
Is this current downturn something that's happened before, or is this like uncharted territory?
This is where understanding the history of crypto is super important.
Yeah.
Crypto's no stranger to these wild swings.
It's a roller coaster for sure.
Remember back in 2018, Bitcoin crashed from almost $20,000 down to like $3,000?
Yeah, that was rough.
It felt catastrophic at the time, but guess what?
It bounced back.
It recovered and went on to hit new all-time highs.
So there's hope.
Yeah, exactly. And what's fascinating is that these cycles seem to happen somewhat predictably,
Really?
often tied to something called Bitcoin's halving events,
Mm-hmm.
which basically affect the supply of Bitcoin.
Okay, we don't have to get into the technical details right now, but
Right.
so maybe this dip is just part of a larger cycle, not the end of crypto as we know it.
It's definitely a possibility.
And let's not forget, it's almost the end of the year, which means, oh yeah, taxes can't escape those. But what do taxes have to do with the crypto market taking a tumble?
Well, investors, even those outside of crypto, often use a strategy called tax loss harvesting.
Tax loss harvesting.
Yeah, it means selling some of their investments that are at a loss to offset any gains they made during the year.
So you can kind of balance things out.
Exactly. It helps reduce their overall tax bill.
Smart.
And crypto's no exception to this. So some of the selling pressure we're seeing could just be savvy investors trying to minimize their taxes.
So it's not necessarily just panic selling.
Right.
Some people are strategically taking some profits off the table before tax season hits.
Exactly. Trying to outsmart the tax man.
Okay, so to recap, it sounds like we've got a perfect storm brewing in the crypto market right now.
Yeah, you could say that.
Bitcoin's failed attempt to hold above 100,000. The Fed's moves to cool down the economy.
Right.
And maybe even some year-end tax maneuvering, all contributing to this wild roller coaster ride.
It's all connected. The Fed's actions make investors nervous, which leads to some selling.
Right? That selling triggers those leveraged liquidations we talked about,
Yeah.
pushing the price down even further.
Uh-huh.
And then you have people thinking, hey, maybe I should sell some too before the tax deadline.
To avoid a bigger tax bill.
Exactly, and that just
Right.
adds fuel to the fire.
It's a chain reaction.
It is for sure.
So for someone who's just starting to explore crypto, all of this might seem pretty scary.
It can be intimidating.
This big dip. But could it also be an opportunity?
That's the million-dollar question, isn't it?
Yeah.
No one has a crystal ball, but understanding these market dynamics can definitely help you make more informed decisions.
Okay.
Maybe this dip scares some people away, but for others, it might be a chance to get in at a lower price.
So there's two sides to every coin.
Exactly.
Okay, that's a great takeaway for our listeners to consider.
I hope so.
Crypto is a volatile market.
Definitely.
Ups and downs are just part of the game.
Part of the fun.
But understanding the forces at play can help you navigate that roller coaster a little bit better.
Absolutely. Knowledge is power. Until our next deep dive, stay curious out there.
And buckle up.
Yeah, it's going to be another wild ride.
Always is with crypto.
See you next time.
See ya.